In the digital era, criminals have developed new methods to manipulate the financial system. Money mules play a key role in many of these cases of fraud and money laundering. Money mules are persons who are misused to conceal illegal money flows. They consciously or unconsciously make their bank accounts available for this purpose. The money originating from criminal activities is transferred to the money mules' accounts, often also by impaired third parties, paid in cash or sent by check. As a rule, the money mules receive part of the money as commission and transfer the rest to a third-party account controlled by the fraudsters in accordance with their instructions. Money mules are often recruited via so-called love scams. Over the course of weeks or months, the perpetrators build up emotional relationships with their victims, who they usually get to know via online dating platforms. As soon as the emotional bond is strong enough, the criminals pretend to be in an emergency situation for which they urgently need help. For example, the victim is asked to open a new bank account into which illegally obtained funds are then transferred. The victim thus becomes a money mule without recognizing the background to the criminal activities. One example of the use of money mules is Operation Wire, a global operation led by the FBI in the US to combat email scams, which led to the arrest of 74 people worldwide, including 15 money mules. The perpetrators behind these email scams use sophisticated methods to gain access to corporate email accounts. In particular, the fraudsters targeted companies that regularly make large cross-border money transfers. They used phishing attacks to gain access to the email accounts of high-ranking employees. The fraudsters then monitored the communication to familiarize themselves with the company's language, the usual instructions and business processes. Using the fake email identity, the fraudsters then sent an instruction to a finance employee to make an urgent transfer to a specific account. The request appeared credible as it used the company's internal language and referred to current projects or upcoming payments. The funds ended up in money mules' accounts and were then quickly withdrawn or forwarded. The fraud cases uncovered by Operation Wire resulted in losses totaling over $50 million. This case clearly demonstrates to banks and bank employees that in addition to implementing digital monitoring systems to detect unusual transaction patterns, it is also crucial to raise awareness and train employees. This training should focus on identifying suspicious activities on clients' accounts, such as frequent cash deposits, without a plausible explanation. Moreover, strictly applying Know Your Client principles is essential to prevent the infiltration of money mules, ensuring the origin of funds is clearly identified and that expected and actual transactions on the account match. Furthermore, clients of banks themselves must be educated about the risks of phishing and cyberattacks, a challenge that will intensify with the emerging use of artificial intelligence in such activities. Thanks for watching this brief video from Fintelligence. If you like what you saw, please click on the button below or visit us at fintelligence.ch